Hi everyone, sorry I haven't been making a lot of videos lately, but sometimes I think things are just so apparent in the economic markets there isn't really a reason to repeat it. Does anyone even pay attention to the PE ratio of stocks anymore? That's the fundamental valuing method for stocks. And yet all of these pundits on TV who are talking about the stock market going up or down or whatnot, nobody ever even bothers to mention the PE ratios. And I'm talking about the reported earnings, not the operating earnings, which the companies can fake however they want. And I'm talking about the last few quarters, not the average for the last 5 years or however a company would prefer. The S&P 500 PE ratio for reported earnings for the last 2 quarters is supposedly over 100. That means it takes 100 years, over 100 years, to earn back your investment in a stock, assuming that all of the profits of that company were paid out to the stockholders and that that company lasted for another 150 years or however long it would take. Even during the tech bubble in the 90s, when the NASDAQ lost, what was it, 3/4 of its value, the PE ratio of those tech stocks wasn't as high as it is now for the conservative S&P 500. So sometimes I feel like it's almost redundant to continue quoting statistics in videos because some talking head on television wearing a suit can just tell people to buy stocks without giving any good stats, and everyone just runs out and does it. Then of course there's the dollar, and once more it's been covered in great detail online at least, just how much debt we're running up and just how much future inflation we're going to have to incur since we can never actually pay off this enormous debt that we've run up. There's one more important factor though that doesn't really get discussed much at all, and yet I think it's one of the more significant changes in recent years, and that's China encouraging its citizens to buy gold for the first time, and China buying up its own domestic gold production to keep as reserves. This never happened in the past. In the past, China just bought up US bonds and euros, and this kind of aided in the gradual transference of the manufacturing base from the West to China, because the West could continue its economy by the fact that China continually bought up all the excess currency in the West and provided consumer goods. But now that the West's manufacturing base has been completely eroded away, there's not really much reason for China to keep propping up the dollar and the euro. And by encouraging its citizens to buy gold, this is a very subtle way for them to assert their economic strength, whereas if the Chinese just went out and dumped dollars, it would be seen as an extremely aggressive move, and it would create a lot of anger against the Chinese government in the United States and Europe. It's not as if the dollar and the euro weren't going to inflate rapidly in the future anyway, but I think this trend is really going to accelerate things. But believe it or not, none of what I just said is really important. There are many people that have said these same things much more eloquently than me. What's really important is that you act on this information. And I can certainly understand why people have a hesitation to completely change their investments, because all their friends around them are investing in stocks and bonds and interest-bearing certificates. All the people on TV are telling you to invest this way. Nobody's telling you to invest by purchasing something that retains value. So if you do have a significant amount of savings, I think the easiest thing to do is just transition over a small percentage of your savings into precious metals if you haven't done so already. That way you're less likely to feel nervous about it. And people have a lot of questions about precious metals investing. There's plenty of great information online. I did a video in the past called Precious Metals Investing. It's really not that difficult. As far as which type of precious metals to purchase, basically all the precious metals are tied together. You don't really have to worry about it so much. I personally prefer not to invest in gold because I prefer to invest in a precious metal that's going to actually be used for something in society one day. But I think the most important thing is just not to continue to be paralyzed by fear and indecision, because even if you make every mistake in the book investing in precious metals over the last 10 years, for example, you still would have done better than almost anyone who invested in bonds or stocks. And the fundamentals simply haven't changed. If you think stocks and bonds did badly over the last decade, wait until you see the next 10 years. And this video isn't about trying to make a lot of money or even telling people they need to have savings if they don't want to. But it's about gradually taking back your financial freedom, no longer holding assets which are subject to manipulation and pilfering on Wall Street and Washington, doing what few Americans do nowadays, owning an asset yourself, and regaining your financial freedom.